The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate?
It was initially the 12% return, but it quickly turned into the people.
Hey, welcome back to another episode of the Multifamily Masterclass. I'm Bart Deal, and today I'm joined by two incredible guests, Heidi Butler and Jameson Manwaring. This is a really special episode for us because this is our first episode of 2025.
Welcome to 2025.
Yeah.
Good to be here.
It's going to be a great year. But before we dive into anything, I want to tell you guys what we're going to talk about today. It's going to be a great slate. First, we're going to talk about our latest acquisition, Venture on Coulter, and then we're going to talk about a 2024 recap. But diving into Venture on Coulter, this is a great opportunity for our investors. It was a great first month of fundraising. We're over 65% funded, and we will likely close on our capital raise at the end of this month, January. But Jameson, do you want to lead us off with what's going on with that project, what's going on with the market?
Yeah, we're really excited about this property. We have been following the property for some time. We knew the seller was likely going to either try to sell it before he lost it to the bank or would lose it to the bank, and he ultimately lost it to his lender. And we began negotiating with the lender for a direct purchase from them, and we tied up the asset, so we have it in escrow right now. We plan to close on it in early February, sometime in first or second week of February. We had a great first month of fundraising. We have all the capital we need to close today, so there's no risk of not closing. We're able to close it now, but we continue to fundraise to strengthen our capital position, and we want to get as many investors involved in this property as we can. We began talking about distress that we were seeing about a year ago now, and that's when we launched our opportunistic fund that was to purchase distressed assets. And we are right in the midst of what I believe is a great time to get invested in good real estate, good multifamily assets, because it's kind of out of favor right now. And if you follow any great investors over the years, you want to buy stuff at the low point. And so we're buying as much as we can in a down market. It's better to buy as much as you can in a down market than to buy as much as you can in an up market.
Yeah.
But most of us tend to do the opposite. And it's always easier to raise capital in an up market from investors because, everyone's kind of talking about it. But you're actually better off investing in a down market. And we are in a down market right now when it comes to multifamily. Interest rates have put multifamily in kind of we're seeing distress. We're seeing less cash flow. We're seeing some of these operators lose buildings. And so that's kind of baked into what people know about what's happening in the industry. So this is the time you want to buy as we get into this year. You also look at what's happened in the stock market for 2 years straight. You've had 20% plus gains, and that's excellent. Hopefully everyone who's listening has some money in the stock market. But now you have to look at and say, well, where do we go from here? And it's about 99% unlikely that we're going to have 20% plus gains again in the stock market. Most projections are it's going to be 5 to 8% returns, which is more normal. So it's a good time to put some money in this asset class right now. And I will also say our operations team, our buildings are full. We're leasing up quickly. The fundamentals are strong. And in places like Phoenix, we're continue to see dynamic growth. We're going to talk about that here in a minute. But now is a great time to invest and to take advantage of this. And just to talk about one more thing with Venture on Coulter is we like where the asset's at. It's right in the middle of Phoenix, right off of I-17, next to Grand Canyon University. It's in an up-and-coming neighborhood, a neighborhood that continues to get better and evolve. Property's been renovated. $2 million in capital expenditures were invested by the prior owner in just the last few years.
Yeah.
Property looks great. We're buying it at the right price, which is the most important thing to us.
Can you shed light on the right price?
Yeah, so when you think about how you make money in investing, when it comes to real estate investing, you make your money at the purchase. That means you got to buy it right. If you can buy assets at a good price and they can continue to go up in value, then you're going to do really well. If you overpay, it's really hard to make a good return.
Yeah.
So we're buying this at a really good value, and that's because it's a distressed seller situation. These are very rare. There are not many of these going on where they actually come out and you can buy them. In this case, we had to go directly to the lender. It never came on the market. We have some really great relationships with lenders and owners, so we are able to acquire some of these buildings. Most of the time, they're trading kind of behind the scenes. So we want to acquire as many of these as we can, but they're hard to find, even though there is this stress is happening and this distress is occurring. It's just kind of in pockets, and it's few and far between. So we want to buy as many as we can at this time in this market environment, operate them really well, and we believe that then, as all things do, this is a cyclical industry. The values will go up again, rates will come down at some point, and we'll do very well on this purchase. So we love the asset, and excited about our first month of fundraising, and think 2025 is going to be a good year to buy real estate.
Yeah.
Well, one thing we were just talking about right before we started the podcast is that distressed properties, distressed owners holding out for post-election, hoping rates come down and that they could get through it. We're not seeing that. We're seeing interest rates stay the same.
Yeah.
Do you feel like that's going to affect how many people held out as long as they could, and we're going to see more coming on in the next few months? Do you think it's 6 months down the road?
Well, if you talk to people last fall in our industry, they were really hopeful as it became clear Trump was probably going to win, that it was going to turn the tide when it came to interest rates. And interest rates have actually gone up since he was elected. The bond yields have gone up. I'm not going to get into all the reasons for that, but they've gone up in that time. And so when interest rates stay higher for longer, there is going to be more distress. Because there are people who are kind of holding on, waiting for, okay, let me refinance this loan that I got that's not a fixed rate loan, and they're at 9 or 10%, and they want to go refi it. The rates are still high, so it's hard to do that, and that will lead to more distress. I don't know how long rates will stay elevated. We hope that they will come down, but there has not been any relief, even though the Fed has lowered rates on what they control. What you actually have to look at is the 10-year Treasury, and that has moved up in the last 90 days pretty dramatically. It's approaching 5% as we sit here today, and 6 months ago it was actually 4.3. So it's gone up quite a bit in the last several months.
Now, Bart, I know you're on the front lines of talking with investors about Coulter. Are you noticing a lot of people excited about a new property coming online? Do you feel like they're a little bit more reserved about it? What are you seeing?
Yeah, everyone's really excited about it. I think being able to buy something at $105,000 a door right now, in comparison to $185 in years past, it's a home run. And then on top of that, they get the area. You look at Grand Canyon University, one of the fastest growing universities in the Southwest. People understand it's a good time to put your investment dollars in that area. But yeah, a lot of excitement. It's really hard to raise capital right now in this market, but with our investor base, it feels easy on this project.
Yeah, we have some friends who are trying to raise capital on some of their projects, and they're having a hard time. And I think this one is pretty unique. This is a unique opportunity to buy an asset in a distressed price, and so we're excited about the investor activity that we've had, and we're moving forward with the closing here in a few weeks.
Yeah. So that's 2025. Before we keep talking about 2025, I do want to look back at 2024 and recap some of the best things that happened here at Neighborhood Ventures, some of the highlights. In Q1, we closed capital raising for Venture on 36th Street, which is a great property here in the Phoenix metro area. Do you guys have any updates on that? Anything you want to speak to as to Venture on 36th Street?
Yeah, we finished up the lease up at the end of 2024. And so now the property's fully occupied, stabilizing, and now the next step for us is to start the refinance process. So I'm really proud of our team who did the lease up. We have some great residents who live in the property, and the renovation also turned out really, really well. All the units have washer and dryers, and I think this is going to be a good property in an up and coming area for quite a while. And it's one bedrooms, but it leased up very quickly, and we're excited about where we go from here.
Yeah, I think one thing that was unique about this project, it was our first one where we did property management in-house from the start. And being able to do the renovations, in a typical project, we'll empty half or a quarter of the property at a time to do the renovations. This one, we really meal pieced it as we turned tenants over, which allowed tenants to stay on that wanted to live there. They were able to move into renovated units as well as maintain cash flow through the process. So for me, geeking out on the numbers, this was a unique and kind of a fun way to do it, and it definitely worked out well.
Yeah. Another thing that we did in Q1 of last year was we launched the Arizona Multifamily Opportunistic Fund. One of the properties that actually sparked our attention to start this fund was a property here in Phoenix that was originally listed for $9 million. A couple months later, it was $8 million, and then $7 million, and then finally sold in a distressed situation at $6 million. So at a 30% discount to its intrinsic value. You fast forward today, and we're really happy we raised all that capital in the first part of the year of 2024 because the situation that we saw with the property here in Phoenix that was distressed, it's happening. We're able to buy an asset here, our first one, Venture on Coulter, at a 30% plus discount.
Yeah, if you can be opportunistic in times like this, you can do well. And we saw that was the trend that was going to happen. So we raised some capital, and we had a lot of investors who saw and supported our idea. And that has been a big advantage for us because when we went to try to purchase a Venture on Coulter, there were a few other buyers who wanted to buy it as well.
Yeah.
The reason why we ended up winning that purchase was because we already had the capital raised and ready to close. And so that was a big advantage that we raised it in the fund earlier last year, and really excited about continue to be opportunistic on the next deal. That one you're talking about is called Quise. I drive by it every day because it's on my street.
Yeah.
I wish we could have bought that one.
Yeah.
But that was kind of what tipped us off that we were going into this type of market.
Yeah. Moving into Q2 of 2024, really exciting. One of my favorite updates is we received rezoning approval at Venture on Country Club, which I know was a process in itself, but we're really happy that that occurred.
Yep, we learned a lot. It was definitely a tough process, but learned about working with the city, learned a lot about what it takes to make these transitions. The city was very excited for this to happen. There's definitely things we had to get through in order to make it happen, but the units we're bringing to the market by doing this transition is a great benefit for everyone.
Yeah, I echo what Heidi's saying. Coming from a different industry before this one, I'm not as patient as real estate people, and I realize things don't move as quickly as they should. I hope the new administration and government tries to make it easier for developers to get some of these things through. But there was a ton of support around this project from the get-go. It just took a lot longer than it should have.
Yeah.
And we're excited that got done. And then a few months after that, we were also able to refinance it into a permanent loan, which was also a really important step in the project.
Yeah, I think it was the Mesa Times, but a media company based out of Mesa had an article that came out that was transforming an eyesore to a beautiful multifamily complex. So yeah, that's a big kudos to the team here and great job. Moving into Q3 of 2024, another one of my favorite highlights is MVRE acquired Venture on Mountain View in a unique UPREIT transaction. Jameson, do you want to talk a little bit about that transaction, some of the best things that came with that?
Yeah, when interest rates were low, we refinanced Mountain View and put permanent financing on it. I believe it's under 4%, and we locked it in fixed rate financing under 4%. And when we did that, it just helps a lot with the operations of the property. If you think of it as a business, if you can lock in your biggest expense, which is interest, and you lock it in at a low 4%, which I don't know if we'll ever see those rates again for a long time, it helps us to generate cash flow for investors. So we did that a few years ago, and that's what made Mountain View such a great acquisition for the REIT, is because that fixed interest rate loan at such a low percent, and then the property does well. It generates a lot of cash, so it's been a great value add for the REIT.
I'd say a surprising value add compared to, I think about right when we went our first walkthrough of that property. If you would have told me then that this is a property we would want to hold long term,
Yeah.
a little rough around the edges, but it definitely outperformed anything we expected, and it just improving the tenant profile, having great management, being able to work with them, changed that property and having a good loan on it. But it was definitely a little bit of an eyesore when we started with it.
Yeah, and it's affordable housing. So if you aren't managing it well, and the prior owner was an out-of-state manager and had outsourced the out-of-state owner and outsourced the management, and it was in rough shape, and it had a bunch of deferred maintenance too. But that's why we got a great deal on it, and we knew that that part of Phoenix is also in the middle of Phoenix, so it's near employment, near freeways. As long as you have really great operations, these properties can do really well, and the market needs more affordable housing.
Yeah.
So everything that's getting built out there that's brand new, that's expensive stuff. So there's only certain type of client and tenant who can afford that. So a lot of our projects are more affordable. They have a much larger pool of potential tenants, and they're full. So we like that.
Yeah. And the last thing I'll say about Ventura Mountain View is during this UPREIT transaction, investors had to choose whether they wanted to be a part of this and consent to transferring their shares to the NV REIT. And over 85% of the investors did. And it's because they understand it. It's a project that's cash flowing. They were able to realize their 12% preferred return, which is exciting.
Yeah, I think out of 150 investors, there were only 4 or 5 that had a specific scenario that we had to work with.
Yeah.
But what happens with the UPREIT is basically your investment gets converted to shares in the REIT.
Mm-hmm.
And so that means if you invested $10,000 initially and now your investment payback is $13,000, now you own $13,000 worth of shares in the REIT. And that $3,000 gain is all tax deferred. You don't pay taxes on that, which is a great advantage. It's kind of like a 1031 exchange if you're trading an individual property. And now you're continuing to compound that and get 5% dividends in the REIT. And if you need some liquidity over time, it's semi-liquid. So you could say, okay, I want to cash out $1,000 or I want to cash out $4,000, and you can get that money back over time. We basically fill your shoes with a new investor, and we can handle that. So we want investors to be, if you're investing in real estate, you do need to be long-term minded. This isn't something you want to get in and out of. But it does provide some liquidity, and investors really love that as well.
And the tax deferred is key. I mean,
Yeah.
I think we spent probably a year researching how we could do this in a way that we could make it benefit our investors in that way, that they could benefit along with that tax deferred. And so it's a great benefit, especially bigger investors, but all investors can benefit. And now they're in a pool of properties instead of just one, which is another opportunity that most small investors don't ever get.
Yeah, and all of the properties, all of the assets in the REIT are cash flowing. And so we're paying 5% dividends. And we had one investor that asked about that, said, well, will that ever go down? Will that ever go up? One thing that we can guarantee is that the only assets that we put in the REIT will be cash flowing. They'll be stabilized. So we're not putting renovation projects or other things that don't cash flow. So we expect that to always pay out a dividend. It could definitely go up from here. I don't see it going down from here. But that's the type of investment that you're in. You're invested in good, well-located real estate that's paying cash flow and that's going to go up in value over time.
Yeah. And I know we talked a lot about it, but I do want to move to Q4 2024. We launched Venture on Culture, which will be the opportunistic fund's first acquisition. So I don't need to spend too much time talking about that, but that is a great highlight because it completely supports our thesis that we had back in February at the beginning of 2024, that we are going to see distress in the market and we are going to be able to buy assets at 30% discounts.
No, but you've talked about it being the first asset acquired by the opportunistic fund. Do you want to just hit a little bit about how people can invest in it, the different ways to be in it? Because it's multiple ways they can get in it at different spots.
Well, it's really cool that we're able to do this because I've had investors say, hey, I don't want to be in the fund structure. I feel like I'm being tied to too many assets. I'd rather invest direct, be able to do my due diligence on direct assets.
On one property.
On one property, yeah. So we have an opportunity for investors who don't want to be in the fund structure to invest directly into Venture on Culture at a 12% preferred return. But you're capped at 12%. So that's kind of the caveat there. Or you can invest in the opportunistic fund and receive Class B shares, which is all of the common equity. And that ends up being around a 16 and 20% return. So it really is what your investment palette is, but it's great that we have the option for both.
Yeah, and there's also an advantage to it being preferred equity.
Yeah.
Warren Buffett loves owning preferred equity because it gets paid first.
Yeah.
So 12% preferred equity is a really nice position to be in. And that's how we've raised capital on all of our projects in the past. Our investors love that, rightfully so. Yeah, I spent a lot of time trying to see where the trend is going. So we started seeing this trend happen early last year and in late 2023. And now we're acquiring this asset now. And as an investor, that's kind of how you have to think. And I think it's important as we get to the end of 2024 and now into 2025, where things are going. That's why I'm really excited about real estate. Good, well-located housing is a great place to be in right now. There is not enough housing in the U.S. We can see that by all of the lack of affordability to buy a home. So more people are renting for longer. Great time to invest in multifamily.
Yeah, so please tune into our next multifamily masterclass podcast because we're going to be talking about supply and demand, absorption rates, and what your investment values look like in 2025.
Thank you for listening to our podcast, The Multifamily Masterclass. Please subscribe to get all of our new episodes.